All right, folks, gather round. Let's talk about jobs, or more specifically, the lack thereof. Remember that whole robust job market thing everyone was going on about? Yeah, about that. It seems like someone accidentally left the fridge door open because 818,000 jobs just went stale. Poof, gone. Now, I'm no economist, but I'm pretty sure losing that many jobs is about as good for the economy as a chocolate teapot is for a tea party. I mean, we're talking about real people here, folks, with real bills and real anxieties about where their next paycheck is coming from. So, what does this all mean? Well, buckle up, Buttercup, because we're about to dive headfirst into the wacky world of economics. The job market, my friends, is a fickle beast. One minute it's a lush jungle teeming with opportunity, the next it's a barren wasteland where even tumbleweeds fear to tread. And right now, well, let's just say we're navigating through some seriously overgrown shrubbery. Remember those carefree days of the Great Resignation? People were quitting their jobs left and right, searching for better pay, better benefits, and, dare I say it, better work-life balance. It was like a mass exodus from cubicle hell. But now, the tables have turned. Companies are tightening their belts, laying off workers, and generally behaving like that one friend who always forgets their wallet when the bill arrives. The good news is, we've been here before. Remember the Great Recession? Yeah, fun times. But we got through it, and we'll get through this too. The key is to stay informed, stay flexible, and maybe invest in a really good career counselor. Now, let's talk about the Federal Reserve, aka the Fed, aka the group of people who get to decide how much your money is actually worth. They've been trying to tame inflation like a bunch of cowboys wrestling a runaway bull. Their main weapon of choice? Interest rate hikes. See, when the economy is booming, the Fed raises interest rates to cool things down and prevent things from getting too bubbly. Read inflationary. And when things start to slow down, they lower rates to encourage borrowing and spending. But here's the thing. Predicting the Fed's next move is about as easy as predicting what a toddler will do with a bowl of spaghetti. They're trying to thread a needle in a hurricane, and the whole world is holding its breath. Will they raise rates again? Will they hold steady? Will they just throw their hands up and say, "To hell with it, let's all just give up"? Only time will tell. Now, let's head over to Wall Street, where the stock market is currently doing its best impression of a roller coaster ride designed by a caffeine-fueled squirrel. One minute it's up, the next it's down, and everyone's just trying not to lose their lunch or their life savings. Economic news, like these surprise job losses, can send the market into a frenzy. It's like someone just released a swarm of bees onto the trading floor. Everyone's running around, yelling, and hoping they don't get stung. The thing is, market reactions are often driven more by emotion than logic. Fear, greed, and the herd mentality can all play a role in how stocks perform. So if you're feeling a little queasy, just remember, it's all part of the ride. Remember, don't panic, it's just money. Sort of. Here are some helpful tips for investors. So, what does all this mean for you, dear investor? Well, it's true. First things first. Don't panic. Easier said than done, I know, especially when your portfolio is looking like it just went through a paper shredder. But seriously, now is not the time to make rash decisions. Remember, investing is a marathon, not a sprint. It's about staying the course, riding out the bumps in the road, and coming out stronger on the other side. That being said, there are some things you can do to weather the storm. Diversify your portfolio, revisit your risk tolerance, and maybe consider talking to a financial advisor. Oh, and for the love of all that is holy, don't put all your eggs in one basket, unless that basket is filled with puppies. Puppies are always a good investment. Next thing to not forget is that knowledge is power and maybe profit. Now, more than ever, it's crucial to be financially literate. I'm not talking about knowing the difference between a Roth IRA and a traditional IRA, although that's helpful too. I'm talking about understanding how the economy works, how to manage your money, and how to make informed financial decisions. Think of it this way. If you were going on a road trip, you wouldn't just hop in the car and start driving without a map, right? Unless you're my in-laws, who seem to think getting lost is a recreational activity. The same goes for your finances. You need a plan, a roadmap, to help you reach your destination. There are tons of resources available to help you boost your financial literacy, from books and podcasts to online courses and workshops. And hey, if all else fails, you can always ask your financially savvy friend for advice. Just be prepared to listen to a lot of jargon about compound interest and index funds. Listen. While it's easy to get caught up in the doom and gloom of the current economic climate, it's important to remember that with every challenge comes opportunity. As the saying goes, one man's trash is another man's treasure. Or in this case, one man's job loss is another man's chance to start a revolutionary new business. Think about it. Some of the most successful companies in history were born during times of economic uncertainty. Microsoft, Disney, and General Electric, to name a few, all emerged from periods of recession and hardship. They saw the changing landscape as a chance to innovate, adapt, and ultimately thrive. So, what's the next big thing? What innovative ideas and groundbreaking technologies will shape the future? The answer, my friends, is out there. It's up to us to keep our eyes open, our minds curious, and our entrepreneurial spirits alive. It's an absolute must. Let's face it, uncertainty is a part of life. It's as inevitable as taxes and as predictable as the weather in England, which is to say, not at all. But here's the good news. Uncertainty doesn't have to be a bad thing. In fact, it can be a powerful catalyst for growth, innovation, and dare I say it, excitement. Think about it. If we knew exactly what the future held, life would be pretty boring, wouldn't it? No more surprises, no more challenges, no more opportunities to prove ourselves. Where's the fun in that? Embrace the uncertainty, my friends. See it as a chance to rewrite the rules, to challenge the status quo, and to create a future that's even brighter than the one we imagined. Just like I say, keep calm and invest on. In conclusion, my fellow economic adventurers, while the current job market situation might seem about as appealing as a lukewarm bowl of oatmeal, it's not all doom and gloom. Remember, the economy is cyclical. It goes up, it goes down, and it goes up again. It's like a financial roller coaster that never quite ends. The key is to stay informed, stay flexible, and stay invested. Don't let fear dictate your decisions, and don't be afraid to seek out expert advice. Remember, knowledge is power, and in the world of finance, that power can translate into profit. So, if you found this video informative and useful, please hit that like button, subscribe, and share it with your fellow investors as well. Till next time, stay happy and stay safe, my people.